Hi, good morning. It's now the 1st of May, Sunday, and let's have a look at an update of what's happened last week. As always, we start with the fixed income because, again, we think this is the most important driver. What has happened last week? Last week, basically, we had a continuation of the higher interest rates in Europe, which is quite significant, as we will show you in a second. Basically, we started the week here. Let's have a look. We started the week here and we ended the week lower for a total of 59 ticks in the bunds. Now, that is 7.5 basis points. So in the European theatre, we had a 7.5 basis point move higher in yield, while in the 10-year note we started here and we ended up here. So basically we had a move which was about 9 ticks higher, which is 4 basis points lower. Now, we think that is pretty much significant. We have a situation where the ECB is buying 80 billion plus in securities per month, and basically what seems to be happening is that they are running out of the marginal buyers of those securities. Having another look at the bubble this time. The bubble as well started the week here and ended the week there. So that's a move about 20 basis points, or about 20 ticks, or about 8 basis points in yield. So the yield is going less negative, which is what we said would have to be one of the precursors to any reflation trade. Again, what seems to be happening is that the Europeans are running out of the marginal buyer, and people are probably happy now to start putting their money to work in higher yielding assets, i.e. less safe assets, but with higher potential returns over the medium term. Bund and bobble showing absolutely the same picture. The contracts are rolling over. What we have established is really the potential target, which would be around 160.69 in the bunds, and we have also established the level at which we would probably be wrong. If now it rallies above 163.25, we are probably wrong. It's done a lot of work here turning this longer term moving average over. So all the moving averages from the shortest to the longest are now above the price. The MACD is neutral, and we have the potential for some more work here, but finally we have the potential for a breakdown below this level, which is extremely important, 160.86, 160.70. If we break that level, we will be in a trend. For the first time since 2011, we will be in a positive trend down in price for the bund, which would be very, very significant indeed. If you remember last week, we said that that would have as a consequence two things. One is that after a knee-jerk reaction lower, the stocks should start benefiting. And last week we got the knee-jerk reaction lower. This is a daily in the stocks, and this is what we're looking for. We're looking for this huge band of support around 2,880 to be tested. we have a gap there, which, with any luck, we will have tested next week or the week after. But we have a huge band of support here as well, around the 2,915 to 2,930 level, which also happens to be the retracement levels for stocks for this move here. And on our count, if we say that this is wave 1, this is wave 2, we've had wave 1 of 3, now we're having wave 2 of 3, wave 3 of 3 would start somewhere in this region. And hopefully next week we will be able to buy stocks at the level that we want to buy, which would be anywhere between 2,950 all the way down to 2,880. If it goes lower than this level, which is basically 2,773, then we are wrong and we'd be out. So we'll be cautiously adding to our position in this area. Just to have a look at what the S&P 500 has done. Well, it's just done a little retracement down. The S&P 500 is now coming into very, very good support around the 2027 region. And below that, the 200-day moving average and the 100-day moving average around 2019.80. So that area is going to be an extremely tough area for the S&P to crack. We would rather count this as a fourth wave, which would probably, be short and not come any lower than 2030, 2027. And then we have a fifth wave higher around 2150 to 2200. So basically we are bullish after more work in the next 2 or 3 weeks at these levels. We are finally bullish on equities, but especially on stocks. We would be hoping to have this area again filled, and then we can go into 3 of 3, which would probably target around 3,300 or so. So we are talking about a 12-13% move over the course of the summer months, which would be extremely, extremely bullish, because then we have a fourth wave and then a final fifth wave, which might take us all the way back up to these contract highs around the 3,600 area. And that is our path for the rest of the year. Now, if you remember last week, we said that one of the preconditions for all this to happen would be finally a move higher in the euro. It is almost inconceivable that the euro, if the interest rate differentials narrow, would not start moving higher. And finally, we've had that. For the first time, actually, the 200 moving day average is now pointing upwards. The 100-day moving average is pointing upwards. All the moving averages are pointing upwards. We would have thought that over the next few weeks, we might play around here for a while longer between 115 and 114, but we definitely want to play with options for a move in the next couple of months to this 118.10 retracement area, and if he breaks that, we think we will go and test this gap here, which is 120.8 or something like that, so nearly 121. So that is what we think we're going to see over the next few weeks. We will see the first knee-jerk reaction down in stocks and probably S&Ps, which we think is a buy. And finally, we're going to see a breakdown again in the Bund, which we would hope will break this trend line, and after having done some more work, and go back down to around the 159, 158 area and fill this gap. And finally, we will have a slight move higher in but much less intense in the 10-year note, which will go back to around the 128.11 area. But overall, we will have a much sharper move in the bunds, down, a sharp move in the bobble, down, and after the first knee-jerk reaction in stocks and S&Ps, but mainly in stocks, where we hope we can buy the 2,880 level, we should be in wave 3 of 3, which would take us to around 3,300 to 3,400 in the stocks, and probably new highs in the S&P. Thank you.